You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for another edition of TWIFO, This Week in Futures Options, the program where we break down everything lighting it up over there in the world of futures options, everything lighting it up over there on CME this week. Of course, I want to thank all of you out there. Take the time to rate and review the show if you're listening wherever on-demand platform you're getting it out there. Of course, keep rating and reviewing. It really does help all the new folks discover the content out there. So we thank you all to take the time to do just that. And of course, if you want even more content in your lives, theoptionsinsider.com/pro is the place to go. You get access to this show, everything else we do throughout the network, of course, live, 2 exclusive shows, Options Oddities, and of course, our Pro Q&A sessions. In fact, you got 2 Pro Q&As this week. And we just gave away our Pro Trading Crate just the last episode to the winner. It was Pete 05. So congratulations. One of our newer members, Pete 05, pulling down the Pro Trading Crate for the month of January. You want to get your name in the hat. You want to win fabulous prizes. You want to check out all those exclusive shows and a whole bunch more. Theoptionsinsider.com/pro is the place to go to do all of that. And let's see who's joining us in the old CME hot seat today. I'm pleased to say we are joined once again by our old friend, Mr. Dan Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir.
Great to be with you, Mark. I'm really excited about what's happening in the markets, and I'm looking forward to exploring some of these with you today.
Yeah, it's kind of a boring one. Maybe we just shut it down now. What do you think? Not really a heck of a lot going on out there today, Dan.
Yeah, that's right. Yeah, not much going on. That's true.
All right, let's see if we can parse it all. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we tell you everything that's lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. And Dan, you know, we've been doing the show for a while. I am hard-pressed to think of another time where we saw such such domination of one or two complexes on pretty much the entirety of our movers and shakers report. Almost all of the light side is one complex. The entirety, I don't think we've ever seen this before, where the entirety of the dark side is all one complex. Never seen that before, I'm pretty sure. Even still, there's only two other spots available. And of course, those two are our other two frequent offenders. So all three of our frequent offenders also making it onto the show this week. So it is a very special show. Dan, I don't know. I'm curious. Have you ever seen anything like that, sir?
No, not when you expect certain things to move together in a sense that, for example, energy, but it's so uniform the way it's behaving right now. I find that fascinating. And also when you think, the old rising tide brings up all the boats, you would expect the same thing on the equity side. Yet we're not really seeing that totally. Most of the complex is for most indices, but we also have some indices or a particular one that's really lagging behind. So I think it's incredibly interesting in terms of what's going on. And then what are the drivers behind this that we could explore to say, okay, why? And I love this kind of day, actually.
All right, Dan, so we have pretty much two complexes you can choose from this week. You want to talk equities on the movers and shakers? You want to start equities to the light side? Or I'm kind of giving spoilers, or energy to the dark side.
Yeah, I want to go with the equity side. I think the energy complex is complex in terms of what's going on. So let's start with the equity side, which I think is a little more straightforward.
Let's do it here. To the light side we go, listeners. I mentioned there are our three frequent offenders, listeners, and they managed to squeeze their way in this week as well. So it's pretty much all equities, all energy, and our frequent offenders making up the movers and shakers this week. Again, never seen this before in the long run that we've been doing this show. Number 5, one of our frequent offenders to the light side listeners, it's Bitcoin, up 3.04%. Last week, it was number 2 in the same direction, up about 9.75%. So a good week, good couple of weeks really for Bitcoin. If you want some bullish optimism on all things crypto, check out our crypto rundown this week. Our guest, Mr. Bill, there was pretty optimistic on all things crypto. So if you want a little ray of sunshine, there you go. We got it for you. Number 4, our other frequent offender. These are the dead trees. They are back again this week, up 3.75%. Of course, lumber, it was number 1 to the upside last week, up 13.2%. Whoever would have thought that dead trees could hang with equities and with crypto and with all these other crazy things, and yet dead trees pretty much outstrips them all from a vol perspective. So just incredible stuff out there for dead trees. Then the rest of the upside listeners, all equities all the time. Number 3, you got the E-mini S&P Mid-Cap 400 up 4.61%. The Russell 2000, number 2, up 5.05%. And the NASDAQ just looking a little frothy, up 5.87%. NASDAQ was number 3 last week, up 5.58%. So we all know the numbers for January. NASDAQ up close to 10% for the month of January. So it's been a good month here. For equities, it's been a good month for the tech-heavy NASDAQ. Was a good day for stocks. Looks like they're starting to turn a little bit now. I mean, the irrational exuberance, I guess, couldn't last forever. Since right before showtime, it seems like the S&P has come off about 30-odd handles. Dow is back in the red again. We'll see if that continues or this is just a pause for breath before they keep buying again. We shall see. No shortage of buyers out there today, listeners, at least for the equities. For the energy complex, very different story. Number 5 to the dark side, listeners. Again, we've never seen this before. An entire half of our movers shakers report dominated all but one complex. Number 5, it is Brent off 4.96%. Number 4, it is RBOB off 5.29%. Number 3, our old friend WTI off 5.97%. Number 2, our third member of our trifecta, our third frequent offender, it is Nat Gas off 9.27%. It was number 1 in the same direction last week, off 13.41%. So as joyous, as optimistic, as effervescent as they are in the equity complex, they are completely the opposite out there in energy right now. And number 1 to the dark side this week, listeners, it is heating oil off 11.18%. So talk about a tale of two complexes, a tale of two very different markets with a sprinkling a smattering of lumber and Bitcoin chiseled on top there. All right, Dan, you already chose it. We got to start there first. It's equities. Here we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's do it. It is time to break down the madness that is equities this week, listeners. If you want to find all this fun for yourself out here, go over to cmegroup.com/TWIFO. Once you're in that report, listeners, you're going to scroll down 4 slots to equity indexes. From there, we can pick our poison where we start there, listeners. Before we get into that really quickly, let's set the table from a vol perspective. Vol was getting annihilated. We're in that weird kind of moment now, listeners, where markets are moving up and vol is moving up. That's kind of how aggressive this upside move has been post-Fed. We are still net down on the week from our show last week, but not quite as much as you might think. And some of our vol products have actually turned positive. VIX coming into showtime a little bit shy of 18.5, about 18.37. Of course, that had a 17 handle earlier in the day. So let's see, how low did our friend get here? We got down to about 17, a little bit shy of 17.5, 17.46. So they were coming for all things VIX, and now we're up nearly a point from there, 18.37. That's still down 0.6 of a point from where it was this time last week, but a little bit frothier than it was even earlier this morning. VVIX, so the vol itself, it was coming off. Now it is starting to move up again because guess what? Vol is moving. VVIX can't be that low when vol is moving. Kicking off the show was at about an 81. Actually up on the week, up about 0.25 of a point. So pretty much unched on the week for VVIX. Vol Q, 24 and about 1/3. That puts it up about exactly a point from where it was this time last week. That puts that VIX to Vol Q spread at about 4.5, about 1.6 points actually wider than it was. Actually, don't take it back, about 6 points. 6 points exactly. So that puts it still 1.6 points wider than it was this time last week. So Vol Q, NASDAQ stealing a vol march on all things S&P 500. Intriguing. But Dan, you chose the right complex. We got to start with equities because this is just a crazy week. We're seeing records in terms of volume across the board. We're seeing huge vol, huge movements. Of course, all of this driven by our friend, Mr. Powell, coming in yesterday, not really giving the most dovish of speeches, and yet the market sure seemed to take it that way, Dan, because they've been buying everything with 2 fists ever since, sir. What do you think?
I think you're absolutely correct. Yesterday's announcement did a couple of things. One, it calmed the market. You know, the stock market's forward thinking. So even when I look at the stock market, for example, or any market, what may be driving it? Is it reality? The Fed did change interest rates. That's real. Or is it the anticipation of a future possibility? In this case, recession. Could we have a recession? And if you look at the idea of about a year ago, we had the inversion of the interest rate market. Well, people say, okay, we're going to have a recession. They had expectations built in. The recession usually happens about a year to a year and a half after you have that inversion. So this year, we could be due for a recession just based on that. Then we have the market saying, holy Toledo, what's the Fed going to do? Are they going to continue to be aggressive? That's really the issue here. It's not that the Fed's monitoring inflation. That's their job. Not that they're looking at economic numbers that are coming out and they're saying, well, it's softening a bit. They're recognizing that. That's a big deal. But it's how much and when the Fed changes interest rates. And all we have to do is go back 20 years or so. If you go back to the late 90s, you know, we had the dot-com bubble at 6.5%. When the Fed got interest rates to that level, it choked off credit to that industry. The interest rates went down to 1%. And then when it started to creep back up again, because remember, the Fed saying we're concerned about inflation. And so one of the tools they have is to increase interest rates. Okay, so they did. at 5.25%. And nobody knows what the number is, including the Fed. But at that point, as we all know, it was the subprime mortgages and credit default swaps. Well, that was a history moment. At 5.25%, boom, the market drops. Now we're creeping back towards that 5%. And the market's thinking, geez, can we handle this? And the reason that comes into play is, when the Fed changes the interest rates, like yesterday, the market reacts instantly, as we are seeing right now. But our economy, it takes 6 months to 18 months, depending on who you talk to, for our economy to feel it. So the concern is, are we going to have a tidal wave of change if interest rates go up too far too fast, which means that could dump us into a recession. So that's that concern that hangs out there. And, Powell did something yesterday that I found very interesting in his comments, and he said it a few times. He used the word disinflation, and that's different. Inflation, we got prices going up. Deflation, we have prices going down. Disinflation, that term means that we have prices going up, but at a slower pace. So they're recognizing some of the fundamentals that we've seen on our economy slowing down. Real estate is especially something that we're seeing that sensitivity to, which we should. So that inventory, everything there is kind of slowing down a bit. So the Fed recognizes that the fact that they're saying disinflation, and he said it a few times, says something about the attitude, the thinking on the Fed. And they did something else that I think really calms down the market, and that is they increased 25 basis points. So we had 50 basis points to 25 basis points from 75 basis points. So we're seeing that recognition on the Fed. So then the idea, maybe we could have a soft landing. Maybe we're not going to have huge unemployment. So that becomes a possibility. We know for our stock market in the United States compared to Europe, for example, about 40% of our stock market is our growth stocks. Growth stocks, like technology stocks, are very sensitive to interest rates. And we've seen that. Just with the idea that we could have high interest rates, we see the technology stocks get hit, like NASDAQ. But if you look at Europe, they have about a 7% growth exposure. They're more value stock oriented. So we have indices that are very sensitive to this idea of interest rates, to this idea of looking forward and seeing this possibility of a recession. And I think the fear factor is what I call it. And in the United States, our stock market is very sensitive to a fear factor. And again, not just to pick Europe, but Europe, we see less of an impact on that fear factor. And here, I think yesterday's action in terms of the 25 basis points and the commentary, because that becomes critical. What they say creates the expectation of the future. And again, that's where the stock market's looking. So I think it calmed things down. And what we're seeing is that reaction in most of these indices, which I think is reasonable. So what we're seeing is enthusiasm. What we're seeing is buying paper coming into the market, and they're willing to commit to the equity side of the market. Now, what we don't want to do is go too far too fast. We also don't want to have a vertical market. That's not sustainable. What we want to do is, grind away higher, let's say at a 60 or 70 degree incline, if you think about it in those terms. That kind of trend is sustainable. A vertical move is not. That's when the market sprints. And just like for us, when we sprint, we can't do it forever. We have to stop and catch our breath. So I think the right ingredients are in place. I think the market reaction is reasonable. And you know something, Mark? One more thought, and that is we got Friday tomorrow. And Friday, I love Fridays because Fridays force people to make a decision, right? So people have to say who's been hopping into the market, risk on buying these stocks and stock indices. Do I want to go home long over the weekend? Should I take some profit on Friday? And I'll get back in on Monday. So Friday's action, I think, will give us a barometer of that type of question, maybe some answers to that. Do we close strong tomorrow? Ooh, that means people are willing to go home. Do we rally tomorrow but break before the close? Well, that means people may be a little skittish going into the weekend. Or have we gotten so high that sellers are now coming into the market? And Monday's action, Tuesday's action will give us some answers, I think, in terms of that. So it's really interesting, I think, in terms of where we are. And I think the market reaction is actually reasonable.
Yeah, it seems like sellers are coming out, at least for right now, for today. Whether that persists or not, who knows? Maybe they're just spitting into the hurricane, Dan. You step in front of this bull at your peril.
Well, you're right. That's a good point, Mark. That's a very good point, because are people saying, I better take something off the table? Is that who's selling it right now? And you're right. We are seeing sellers coming in. Or has this gotten high enough that buyers just want to take profit? If it's buyers taking profit, we should have a positive close tomorrow. If it's new sellers coming in because this market got way overdone and we can't justify being up here fundamentally, then we would expect a down day tomorrow. So that's a good observation on your part.
Let me ask you this, too. I've been trying to take the pulse of a lot of our guests here on the network, and I don't think I've had a chance to chat with you about this, but this is a market, I think it's clear, it's extremely Fed-driven. I've called it the most Fed-driven market I've ever experienced. I'm curious for you. You've seen a few markets in your day there. Would you agree with that? You think this is the most Fed-driven equity market you've ever seen?
I think, yes, I do. I think our sensitivity to and we've always had that, so that's not new, but it seems our sensitivity, that fear factor, is really heightened. And I guess this fear of recession is maybe at a level that we haven't had. And maybe, Mark, maybe it's this doggone COVID thing we had to go through that has also created this sensitivity and urgency that we're seeing. I'll tell you just a quick side story. There's a friend that I know at the Bundesbank in Germany, and he was an economist one time. He's doing other things now, and I was there in Frankfurt. I went over to see him, not for work or anything like that, but just to have lunch. And I'm sitting in his office. There's this wall with all these black binders in it. And this fellow comes in. He's saying something to him in German. And he knows he can talk in front of me in German because, I don't have any idea. Anyways, he pulls this binder off. They're saying something, and he's leafing through it, and he's pointing at something, closes the book, puts it on the wall. The guy walks out, and he sits down. He said, one of the things they did at that time he was involved with was writing the speech for the president of the Bundesbank. And he said, we think we used that word before. So it goes back to how everybody parses what the Fed says, just like they were sensitive to at the Bundesbank. And the fact that Powell said disinflation, I usually don't jump on things like that, but that word kept popping up, and I think it really reveals a lot. And So people, the sensitivity that you're talking about, I think it is there. Maybe it was there as much in the past, but it sure doesn't seem like it.
I mean, the Greenspan days, don't get me wrong, they were pretty Fed sensitive too, but it seemed like it was in and around the meeting, and that was kind of it. People weren't talking about the Fed every day in the market, regardless of when the next Fed meeting was. They were measuring Greenspan's briefcase. They got all excited about that. But then they move on to other things. Right now, it's how does everything back into what the Fed is going to do? It's crazy out there. Speaking of crazy, listeners, like I mentioned, the equities are kind of crazy. And since the NASDAQ is the craziest of them all, we haven't had a chance to really parse it on the show in a while. Let's start out there, listeners. And how much paper going up in NASDAQ this week? 152,000 contracts, so a decently active product. Again, not an E-mini S&P, but a decently active product nonetheless. Coming into showtime, the NASDAQ, 12,760, up 538.5 handles, or 4.41%. Again, just since Monday's show, you go back to our show from last week, it's up nearly 6%. So crazy times out there in the NASDAQ, tech heavy. Some of these names, your Metas, your Teslas, these names have just rebounded. And Meta's up over 100 handles in the last couple of months. I mean, it's just insane, some of the moves we're seeing out here in these very tech heavy names. Not surprising that NASDAQ leading the charge. Tesla, I think, up over close to 100 handles. It's just insanity. Let's see what we're seeing out here from an overall action perspective. You know what else is interesting about NASDAQ, listeners? Whenever we talk about equities, we've just been obsessed with 0 day. It seems like the focus, the frame of reference for all things equity is get as close to the expiration fire as humanly possible. And here we are talking NASDAQ, the most volatile of the equity bunch. And it seems like it's kind of the opposite. The most active contract in NASDAQ this week was not the contract going away today or even tomorrow. It's the March 13,000 calls that expire in 43 days. I did not expect that coming in, listeners. So that in and of itself is kind of intriguing. What is the March vol, you may be wondering, in the NASDAQ? 21.5, off about 1.3 points right now. So actually coming in a little bit this past week, which again makes sense. The Fed announcement is kind of like an earnings announcement for the market, listeners. So you expect, unless you have a crazy move, which we do have a crazy move in the market right now, so that could gum up the works, of course. But outside of that, you usually expect vol to come in after an event like that. Looking at the skew, man, we had some big moves in the skew this week. Last week, the puts were 11.5% cheap. You might think with vol coming in post-Fed, those puts would come in. No, sir. Those puts now 15% bid. So kicking up 3.5 points since last week. So you want to buy a put in the NASDAQ right now, it's going to cost you. In terms of calls, 7.6% cheap last week, 10.3% cheap this week. So the calls cheaper, puts are getting pretty pricey, but they're not even, from a vol perspective, not even the priciest puts on the term structure here. Looks like that honor goes to the June puts in the NASDAQ. Those are 17.5% bid to the at the money vol. So puts getting kind of juicy in the NASDAQ. And again, looking how some might say top heavy we are out there right now, makes some sense. Also makes sense that today would be the big day. Only about 3,000 contracts leading the tape. So a smaller volume product, obviously, than your E-mini S&P. The big day was today, 3,700 on Monday, 600 each Tuesday and Wednesday. So pretty active throughout the week were these 13,000 calls. The big day, obviously, today was like they were opening and closing throughout the week as well, which again makes sense. 13,000, important psychological number. And certainly as we were just exploding north, it seemed like we could be there in a couple of sessions, let alone by March. So not surprising to see the 13,000 calls leading the dance. Right behind it with 2,500 contracts, also another March contract. So NASDAQ trading a little bit longer term, which is interesting. And 2,500 of the 10,000 puts also in March. I say 2,500, almost all of that, 2,300 and change was on Wednesday. All of that opening pretty much. So folks piled into the 10,000 puts on Wednesday in March as well. Intriguing stuff here. That could also be why the puts shot up a little bit here, listeners, and maybe some opening buyers here. Interesting. So 10,000, 13,000 strangle / risk reversal. If you had to perhaps buy each of those legs, which one would you rather have? The 13,000 calls, listeners, or the 10,000 puts? That would be a heck of a sell-off in NASDAQ by March, where we've seen crazier things out there. Wow. And then right behind it were the 11,000 puts, also trading a ton, also on Wednesday. About 2,400 this week, 1,600 of them going up on Wednesday. That could have been a vertical, but the volume doesn't line up 10,000 to 11,000 puts. So it seems like folks were just piling into all kinds of March downside on Wednesday. And let's not forget the big dog. Actually, before we get there, our friend the Russell 2000 was actually lighting up this week as well, up 5%. It was our number 2 mover and shaker. Surprisingly, volume-wise, still kind of a light week, about 20,000 contracts. The big dog out here in the Russell 2000. Russell 2000 right now, 1995, so just a smidgen below 2,000 again, listeners. It was the 15.5 puts, also in March. Longer-term paper. What's going on in these products? This is not the equities we know and love, listeners. 15.5 puts in March, doing about 1,400 contracts. Again, almost all of that was Wednesday. Looks like paper closing out there. So some folks bailing on the 15.5 puts after the Fed announcement on Wednesday. What is the vol in the small caps right now? 21.5, up 1.3 points. So small caps catching a bid from vol, even as vol is coming in the NASDAQ. Skew-wise, these puts are about 13.6% bid. So clearly rich, clearly bid from a percentage point standpoint. Not quite as bid as NASDAQ, but pretty darn close. The calls were 9.7% cheap last week, 9.5% cheap this week. So intriguing stuff out there in the Russell 2000. But now let's get to the big dog, listeners. The E-mini S&P. Let's see how much action was on the tape. Spoiler alert, I'm going to go out on a limb and say it was probably a lot. Let's see here as I keep scrolling down. Yeah, usually this time of week we might see 2.3, 2.4, maybe 2.6 million on a crazy week. Already this week, listeners, 3.6 million contracts on the tape in the E-mini S&P. So, spoiler alert, that's a lot. We were just talking on our last show, the option block with the Flow Master. He was saying he thinks in general equity options, we are pretty much guaranteed to have a record volume day. And it seems like the equity options over here at CME definitely following suit. Coming into showtime, 4,175, up 91 handles this week, or 2.25%. Of course, you go back to last week's show. S&P actually 500, not on the list. It's actually the S&P 400. Of course, it doesn't really do a heck of a lot of paper. So we're going to focus on the big dog. And you know where a lot of this paper was going, listeners. It was all going out tomorrow, today. The most active contract this week. By the way, what is the vol out here? We're at about in this contract going away tomorrow. So this is kind of a meaningless number, 46. Let's not pay attention to that because vol on the S&P is clearly not a 46 right now. A little bit farther out, we're seeing 18, 19, which is about what we're seeing in VIX itself as well. 34 quarter puts leading the dance this week, going up 79,000 times. Gotta love these, listeners. These are these kind of nonsense puts, people picking up nickels in front of a steamroller. Probably not even a nickel in this case. And these went up again, 79,051 times. All of that opening, all of that on Tuesday. And they had not traded any other day this week. So they came in, got their nearly 80,000 contracts off, and then got the heck out of Dodge. Yeah, these are pretty close to at the money. 34 quarter puts. 3,400 puts also trading that same day, 34,000 times. So there you go, listeners. All kinds of opening nonsense paper. Let's scroll a little bit past that. We've also got the 3,500 puts expiring tomorrow. Those did 50-odd thousand contracts this week. So not a heck of a lot of valuable material there. Here we go. Here's something that actually has a little bit more meat on the bone, a little bit more relevant to you folks out there. The 4,100 puts going out tomorrow. These have traded 49,000 contracts this week, listeners. 45,000 and change of that today. So yeah, there's a lot of opening paper here. Also, obviously, a lot of back and forth. 4,100 puts going out tomorrow. 75 handles below where we are right now. Could we see the S&P get there by tomorrow? Given these moves we've seen out there, listeners, nothing's off the table. Obviously, you start aggressively melting down, you're going to see circuit breakers kicking in. But outside of that scenario, 4,100 by tomorrow, man, that's a heck of a lot of paper. Also, the 4,110 puts also going up 39,000 times today. Wow, these numbers are just through the roof. And again, far more relevant contracts than those far, far out of the money. But also saw the 39.5. Again, these are all expiring tomorrow, listeners. These are pretty much one-day trades. 39.5 puts also doing 23,000. This one a little bit more spread out, pretty much 5,000 a day all week, including about 5,000 exactly today. So, wow, but massive prints here on the 4,100 puts going out tomorrow. Man, I'll have to dig in some of the block reports later, see if I can find exactly what they were up to out there. Let's keep scrolling, listeners. 36 quarter puts going out in 6 days, doing 18,000 puts. 37 half puts also going out in 8 days, doing 18,000 puts. Again, just today. I mean, the numbers today are just to the moon. Let's go a little bit farther out again. The 4,000 puts going away in 15 days. These are the Feb 4,000 puts here, doing 16,000 contracts. This one, weirdly enough, maybe because it's a little bit longer time to go. I mean, 2 weeks in an equity is an eternity. It's actually pretty evenly split out. About 5,000 on Monday, 3,700 on Tuesday, 5,300 on Wednesday, and about 2,000 today. So not the explosion of paper today that we're seeing in some of these other ones. Let's keep scrolling because the paper is just everywhere, listeners. And it is flying fast and furious. End of Feb, so the 26th day to go. These are the 4,000 puts, also going up 11,000 times this week. 7,400 of that today. So it was opening all week long, but for small size. Today, another 7,400 piling in. Only 2,300 were open coming into today, so clearly a lot of that is opening. Could be some back and forth as well. 4,000s listeners in 26 days. Could we be there? I mean, at this point, easily. We were below 4,000 not too long ago, listeners. So crazy stuff. If you want more upside here, we've got expiring on the 24th, so 22 day to go. Feb 4,175 calls, doing about 4,000 contracts this week. 3,100 of that going up today. So 4,175 listeners, these are at the money calls. Tons of folks piling in to these at the money calls on a weird date, expiring on the 24th. So kind of some interesting paper there. But again, at the money calls over the next couple of weeks here in the S&P. Interesting. Obviously, you're playing with some fire. You need some movement on these bad boys for those to pay off. But hey, you're getting it today. So the embarrassment of riches, listeners, keeps coming. Oh, here we go. We buried this one. Again, back to March. Folks like March in the equities today, Dan. So we obviously have our stuff going out today and tomorrow. That's to be expected. But March coming on strong. The March 4,000 puts. Also, obviously, in our friend the E-mini, doing 24,000 contracts this week. Not all of that today. About a third of that going up today. About almost 9,000 contracts. About 8,600. And then we have 6,000 on Monday, 3,500 on Tuesday, 5,600 on Wednesday, opening all week long. So there's a good chance today is probably opening as well. And again, 4,000. We were below that not too long ago, so that is not as perhaps outlandish as it may seem. We just keep scrolling to see any other interesting and or aberrant paper. 4,800s. That would be interesting. 4,800 by September, listeners. 3,700 of those bad boys going up this week as well. They went up in two chunks, actually. 2,000 on Tuesday. Looks like someone took off 2,000 of the 4,700, 4,800 vertical in September. Interesting. And then came back the next day and opened it again for 1,000 more. And they're trading in again today 680 times. So weird paper. 4,700, 4,800 in September. Closing and then opening again for decent size here. Man, it's all over the place, Dan. We could literally do the whole show on just what we're seeing going up in the S&P today. We have some other complexes we want to get to, but really quickly, any of that I broke down there, it could be the NASDAQ, could be the Russell 2000, or just the tsunami of paper in the S&P. Any of that stand out to you, sir?
Well, yeah, it does. This March issue that you're pointing out, isn't it interesting?
That's kind of weird. You don't see a lot of March going up in equities right now.
No, and it says something about the attitude that people have, right? Because that's why I love what you do, Mark, because you give us a feel for the attitude of people in the marketplace, right? Because when somebody puts a trade on, they're expressing an opinion, an idea they have about price action. Like what I find interesting in the S&P is that the last 3 times we've been in this price range, and that's above 4150. We were there in September. We were there again in December. We got above that 4150. Each two times previously, we fell out of bed after that. We found sellers at those higher levels. And we're seeing that, as you point out, today, right now. And what's going to be interesting is tomorrow. How do people want to go home over the weekend? For this to back off a bit wouldn't be surprising. And then it goes to who's doing it. New sellers coming in because they think we are overdone. They've seen what happened the two previous times and they say, I'm a seller here. Or is it buyers now just taking profit? If it behaves like it did in the past, we could fall out of bed here. So maybe those 4,000 puts and the other things you were pointing out to us may not be that ridiculous, actually. I mean, we went from 4,000 to 4,200 in 3 days.
Yeah, we were just there.
Yeah, you're right, Mark. We were just there.
Man,
so it's fascinating.
This is crazy time. We could spend the rest of the show obviously talking equity. I do want to squeeze in the other complex that is dominating the entirety of the dark side, which is energy. So let's go there next, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, Mr. Dan, energy doing something I have never seen before on the show, dominating an entire complex, dominating, I should say, one half and completely of our movers and shakers report. So I have to tip my cap to energy in that respect. But, it's all dark side here for energy this week, Dan. We just had a guest on our Pro Q&A hot seat beaming in from Germany. And they were saying, that this narrative of, Europe was going to freeze and everyone was going to die. And that was obviously part of the big bid we saw kicking in for nat gas. Obviously, now that we're pretty well into winter, kind of a milder winter than some maybe expected, except for obviously right now. Other factors leading in there to maybe showing maybe that narrative not quite coming to pass, Dan. Maybe some of that's the reason we're seeing so much blood out there in the energy waters these days. But what is lighting up your tape in the world of energy right now, sir?
Well, it mystifies me, Mark. That's the only thing I can think of. And that's nat gas. Let's start there. This is a market that's given us a stutter step as it's gone lower.
By the way, we have a two handle again in nat gas. How crazy is that?
I know.
Did you think we would see a two handle again anytime soon?
No. I mean, yeah, when we went below 3, I'm thinking, well, we got to find buyers at this level.
That's it. So buy it all. Two handle. I got to buy it all, Dan. Excuse me. I got to go. Yeah, exactly, Mark. It just fundamentally, we're approaching levels that makes us so cheap, you would think that people would now start locking in hedges because it's so attractive. But we just haven't seen that happen yet. Around 260, 269 or so, I should say, that we saw some of that, a little bit of buying coming in. And right above that, around 280, some buying came in. So I thought, okay, we could be going back up above 3, but it hasn't happened. And today, we're like at 247 or so. So it's cheap. You would think buyers would come in. Fundamentally, you would think that. And, what's interesting, too, you're right about Europe. We're not seeing what we thought we would see in the past based upon, their demand for it. But, for the United States, our exports, our LNG exports are down 5%, believe it or not. But 68% of it's still going to the EU and 23% or 28, no, I think it's 23% is going to Asia. So we're still seeing that movement, but just not reflected in the price action that we're seeing. And you think about, let's say Texas as an example. Well, first, Texas is unique. It's like Oklahoma. The largest employer is the oil and gas industry. In Texas, they employ almost 950,000 people in that state are somehow involved in the industry, which is amazing. And they had a record production of nat gas at 11.2 trillion cubic feet. So they're pumping away. They're taking advantage of what's there.
And, you mentioned before, Mark, about heating oil. We're seeing that at the bottom of the list, too. But what fascinates me about that, for us in the United States, we use heating oil to heat our homes in the northeast part of our country. The rest of our country really, really don't use heating oil to heat our homes. And heating oil is also that grade that we could use for an example for jet fuel. But we're not seeing that pick up either. On the nat gas front, we use a third to heat our homes and to cook our food. So when we think about cold temperatures, that does come into play. But we also use a third to generate electricity. We generate more electricity in the United States with nat gas than we do with coal. And we have weather that puts demands, in this case, cold weather, not only on heating, but also on electricity generation. And our economy is not doing too badly. A third of nat gas is used in the industrial production, like chemical industry and the steel industry. So oftentimes in the past, that was a barometer of our economy, was the consumption of nat gas. But geez, like you say, we're in the twos. Who would have thought? And could we go lower? Absolutely. Is this the lowest we've ever been? No. And it's going to continue going lower until we find some kind of sustained buying. And what's fascinating, if you look at the daily chart on this, we haven't had more than 2 days since, for months, where we've had consistent buying coming into the market. So it's really one out of the complex that just it fascinates me. I don't get it. Fundamentally, it's just the pieces don't fit. But, for us, for all of us, actually, when we look at a market, what determines, I think, what we do isn't the fundamentals. The fundamentals create a belief. Price action determines what we do. So, I may want to be a buyer of nat gas. Nothing telling us to do that today until price gives me some kind of idea that other buyers may be there. So price puts money in our pocket and takes money out of our pocket. And to me, price action is the final determining factor. And, what I want fundamentally is irrelevant when it comes to price action. And I think nat gas is a good example of that.
Yeah, a two-handle. We were talking not too long ago about all the 10 calls and above, Dan, and just the panic buying out there. I did not think we would be seeing a two-handle in the dead of winter, too. This is the time when you expect to see seasonally a little bit of juice still in nat gas. It might start coming off soon for the spring, but not right now. So just all sorts of, a two-handle. Dan, I think you and I should just hang up and just go just buy all the nat gas out here. But let's see. Looks like looks like folks are doing that, Dan. There's a lot of paper on the tape in nat gas this week, listeners. By the way, go to that drop down, go to, the deal, go to energy, scroll down the nat gas. Let's dive into it, listeners, because we got a lot to unpack here. How much paper is on the tape in nat gas? Remember, I say normally a decently active week in nat gas, 400, maybe 440,000 contracts. This week, 660,000 contracts already on the tape in nat gas. I'll have to check with CME historically, but that sounds like it's pushing a record. If it isn't, it's pretty darn close. So it looks like we're on tap for a record week out here and probably a record day here in just nat gas options, just stuff lighting it up across the tape. Again, we're at a two-handle again, listeners. Not that long ago, we had Carly on. We were talking about, sevens and tens. It's just verticals. It just, wow. It's all I can say is wow. In terms of action, listeners, where is the big dog? There's so much paper. It's kind of just an embarrassment of riches. And it's the two puts across the board. These seem ridiculous. Remember, we saw these put strips going up for a while, listeners, every month from pretty much February all the way out to September, October. Someone loading up on a couple of thousand each of the two puts or the three puts or the two half puts. They seem like kind of absurd strikes. Now most of those strikes are in the money. The two puts today here, these are the April 2 puts. They're the slight volume winner with 43,000 contracts today, or this week, I should say. 33,000 of that going up today, listeners. So yeah, that's opening. Only 20,000 coming into today that was open. The rest of the week, 5,000 on Wednesday, 3,000 on Tuesday, 1,000 on Monday. It was opening all week long. Obviously, more opening today. 2 puts, listeners. Are you piling into those? These are April, so you got 53 days. You think we're going to drop below 2? Dan just said, haven't had more than 2 days of sustained buying in nat gas for months, so we could be heading that way. Or would you be selling these puts with 53 days to go, thinking, hey, if we drop below the 2 handle, I don't mind picking some up here at these levels. Right behind it, listeners, right behind it, we have also the 2 puts. This is 2 puts across the board. The 2 puts in June, listeners, going a little bit farther out. Those doing 41,000 contracts. Again, 33,000 going up today. So today just blowing the doors off here for all things nat gas, listeners. The rest of the week, 3,000 or so each, all opening. But today, obviously, the big day. And then, not to be outdone there, we have these are the May 2 puts, so a little bit nearer dated. These are almost doing the same amount, doing just a tick under 40,000 contracts. 33,000 again going up today. So obviously someone is just putting up 33,000 2 puts just across the board here in these early months. So clearly a lot of near dated paper. June's about as far out as they're going with these size prints. Clearly they think there's some action going on here. Wow, just paper across the board. 1 3/4 puts also lighting it up here in May, doing 28,000 contracts this week. 26,000 of that going up today. So it could be a little bit of vertical action. 2 1 3/4. Either way, it looks like there's 36,000 open in the 2 puts. So they could be rolling some of those down to the 1 3/4. Only 5,000 open there. Let's look really quickly here for the April, see if that's the same case. There's 20,000 open, so they're clearly opening with the 2 puts in April. And 25,000 of the 1 3/4 puts also going up today as well. So there could be, again, some vertical action. Either way, they are opening on the 1 3/4 puts. So a 1 handle, listeners, 1 3/4 puts. When you were listening to the show a few months ago, we were talking about 5, 6, 7 handles and above. I think we were talking about the 1 3/4 puts. That here we are, listeners. Folks are just lighting these things up for size. In fact, if we go beyond, it's all very near dated paper. If we go beyond the end of the year, listeners, if you even go beyond October here, you don't see much more than 7,800 contracts going up. Beyond that, get to November and beyond, it's about 1,200 contracts, a couple thousand here, 500. It's all this paper is going up very near dated. So nat gas trading, kind of like an equity. It's all very near dated. We are kind of coming up against it, listeners, but we got so much to unpack. Let's go really quickly out here to crude oil, obviously the other big dog in the energy complex. Dan, really quickly, sir, what is catching your eye out there in the Texas tea this week?
Well, I think crude's fairly valued. We've basically been in a sideways move in this market now for a while, going back to like December or latter part of November. We've been in a, $85 to $70 range, about a $15 range. I think that should continue. Not that being said, I do think there's opportunity. We're going to see some volatility. I just don't think there's any fundamental reason to see a strong, dramatic move up or down. So I think right now we're fairly valued in this $15 range. And I'm looking for a sideways move.
Now let's see what we're seeing out here, listeners, in terms of action. A pretty decently active week. Not as much paper on the tape for WTI as with Nat Gas. You're talking about 100,000+ more contracts in Nat Gas. WTI closing on a 550. Nat Gas was at about 660. So more paper going up in Nat Gas, but still a lot of paper. 75.80 is where we're hanging out right now, off nearly 5% on the week. And of that 550 or so thousand contracts, looks like the big dog, listeners, are the 85 calls here in March. So these March calls only have 13 days to go. So these are near dated contracts. Doing 20,000 contracts, 8,000 yesterday, 6,800 today, 2,000 each Monday and Tuesday, back and forth opening to closing all week long. The 85 is going away in 12 days. Interesting. Also, the 70 puts, listeners, doing 16,000 contracts, again, kind of spread out evenly throughout the week. So at least for this month, we're not seeing this expiration cycle, I should say. We're not seeing the massive concentration of paper today that we were seeing in that gas. But let's keep scrolling. Maybe that will change. Let's go out to April. The April 70 puts doing 16,000 contracts as well. Again, kind of evenly spread out throughout the week, at least yesterday and today. 7,000 yesterday, 6,000 and change today. The rest kind of scattered throughout the week. Opening yesterday, potentially opening again today. Going to break the 70 handle over the next couple of weeks or months, listeners. That's intriguing. Let's go a little bit farther out. The 115 calls in D's. These have the whiff, though, of one of those verticals, listeners. Let's see if that's the case. Yeah, the 115, 114 vertical went up 1,000 times on Wednesday, and then 7,000 by 13,000. They did it on a ratio. It makes even less sense today. So you know what? We're just going to ignore that paper because it's a whole bunch of nonsense, and keep scrolling out here a little bit. 95 calls. Pretty active in March of next year, 2,100 of those, as well as it's like the 110 calls in June, listeners, doing 5,300 contracts. Looks like it might have been some vertical action on Monday. The 110s and 120s both did 3,500 of the 110s, 2,800 of the 120s, opening on both. So potentially a vertical, but the rest of the week, the 120s were still trading and the 110s were kind of done. So seems like maybe just adjacent strikes trading throughout the week here, but 110s and 120s here also pretty active in June here this week, listeners. All right, we are kind of coming up against it here. Let's look really quickly. Any other interesting and/or bearing paper? How about the 65 puts in September, listeners? Those also going up this week. 2,000 times here. Again, kind of evenly spread out throughout the week. 85s, 110s again. Yeah, it looks like a lot of that near-dated stuff dominating the tape here, listeners. 70, 75 puts going away in a few weeks. So yeah, a lot of near-dated paper here. Probably some records looming here. And maybe not for WTI, but for some of these other products talking about today, quite certainly. All right, Mr. Dan. I would say we packed a lot of living into the show today, but we only really did two complexes. They were just very busy.
Yeah, it's such an unusual, like you said before, such an unusual environment that we're in.
Hope the listeners like energy and equities today, because that's what they got. Listeners, speaking of equities, I should say really quickly, Dan, we had a flash poll just expire as we were talking out there, listeners. We asked our audience, Dan, these markets are rallying hard off the Fed announcement. Does this rally have legs, or is this a dead cat bounce, Dan? And it broke down pretty much 2/3 to 1/3. 2/3 saying it was a dead cat bounce. 1/3 saying this rally has legs, Mr. Dan. What do you think?
Interesting. I think it could have legs as long as the calming effect of what the Fed has done is still in play. And I do think this Friday is going to be a barometer of that to give us an idea of where the market's reacting and how it's reacting.
All right, fascinating stuff. We shall see more data on the docket tomorrow, listeners. So if you weren't done with the Fed and all the related numbers, there's more coming out tomorrow that will feed into this whole Fed loop we've all been living in for the last couple of years. Mr. Dan, if they want help navigating these markets or just understanding what the hell is going on, where should they go? What should they do, Dan?
Well, I do a free daily video on 22 markets. And I pick out different markets to take a look at every day. It's at dangramza.com. And it's on a daily chart. There's swing trades. That's the concept. There are red and green lines, which represent buy and sell levels. These are not trade recommendations. I'm just sharing how I see some of these markets unfolding. And you can go back, I can't remember how many years in these videos, and see, okay, what did he say when this happened? So if you want to go back a ways, or just to see how these markets have unfolded and what I was looking at, it gives you that ability as well. And there's also a course there and a more advanced video. But if you're never looked at futures, a place to begin is just look at them, follow them. And that free video may be just one more reference that you can look at.
All All right, check them out, dangramza.com. And you also know where to go to check out all these reports for yourselves. Whenever the mood strikes you, these reports are always running for you over there, listeners. CMEgroup.com/TWIFO, TWIFO, is the place to go to kick the tires and light the fires. That is going to do it for us on the network today, listeners. Don't worry, we're back again tomorrow with our guest Scott Nations on the vol views to help you deal with this crazy volatility we're seeing out there. So that should be a fun one. And then after that, for all of our pro folks out there, you get your nice dose of options oddities. And back again next week with our usual assortment of content all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.